Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mostly red arrows around the world today as they couldn't reach an agreement in no cutbacks in oil production from the Doho meeting. And as a result of this, futures are down in oil and S&P, right?
Yes, and they were down a lot more last night. I actually was just telling you, I had a barbecue at my house with a bunch of couples, and right away news flashes on all their phone about no agreement, U.S. oil futures are down, 6%, et cetera, et cetera. And it's so interesting the way, the media likes to dispel news to try and make it as crazy as possible so people will read it. So I was like, all right, Monday's going to be a little bit of a, complicated day, especially if you're long a lot, which I'm not. Or even better with more volatility. Well, anyway, S&P futures were down like 11 handles last night or 12, and now they're down 6 or 7. Oil was down about 6% and now down 3 or 4. So pretty much taking it in stride because the rest of the world is taking it in stride. I just looked over at Europe, and Europe's well off the lows. The DAX was actually almost flat. You look here at the the chart of the EWG, and Germany's still been caught in this downtrend, okay, and it's still below the 200-day, but it's knocking on the door again. So I would say if the EWGs could hold again higher, maybe above this like 25-ish area, next time it tries to rally, it'll get above the 200-day, which would show you a bit healthier action in Europe, but still caught in the downtrend. And as far as in Asia, there were 2 earthquakes in Japan, so that's getting affected a little bit more than just oil. And our thoughts and prayers go out to everyone involved there. It sounds pretty chaotic. So the Nikkei was down like 3.4%, and the Shanghai was down like 1.4%. So they're not holding in as well, but they have outside scenarios taking place there. But overall, markets come a long way. So a little downside type action, I think, is welcomed by both the bulls and the bears.
Last week there was some power towards the beginning of the week, and then it got pretty quiet towards Friday. Would you say that's a healthy digestion?
Well, you can't have strong gains every day. Last Tuesday, Wednesday, we broke above that key level in the S&P and then held it on Thursday and Friday. So what that does is it gives us good levels to trade against. If you look at the chart of the SPX, you'll see that, first of all, look what we're bumping up against. This is some long, like 2-year resistance right there, which is at 21.25. Then you have a little bit more here. So anyway, we've come a long way since the double bottom, that happened in February. We held and digested higher here, took out this area of resistance, and we've been above the 8 and 21-day ever since. So now if you take a closer look here, because that's what we do, we trade it, a lot closer up. In the S&P, you have an upper area right now that's trying to hold. So I would say you have one pivot here at 2076, and then you have the 8-day down at 2068. So I'm going to say the same thing I've said during the course of this entire rally. You can't get too bearish if the market can't get below this 268-ish area. Remember what happened here? We couldn't get too bearish if they can't break us below 2040. So that's how you stay with a move based on the action. And then you have resistance, which is right around 285 to 287. But overall, still digesting well, and we'll figure out early this week if this upper level in the 8-day continues to be big support the way it's been since breaking out above this 1970.
We mentioned oil earlier. It's still holding the upper support around 38. What level do you think the market gets anxious if it starts breaking to the downside?
I think 38 will make some headlines. It's really like 36-ish. Between 35 and 38, you can't get too bearish and think the world's going to end. But I have a feeling that area is going to hold. So if you look here at the chart of the USO, you'll see, oil also pulled back a little bit, ahead of Doho-Noho. But anyway, that's that's the title of my note this morning, Doho-Noho. So anyway, with that said, the USO and oil has been in a downtrend for so long. This was here when it broke. Remember the last time it tried to rally? Well, it broke down when it got back below the 8 and 21 days. So now, on this rally attempt, it's still, you could probably draw your line like this now. It's still above this trend, okay? And if you take a closer look here, I'll show you what price. I would say one of those, can't get too bearish if, this spot holds. And this is a pretty big gap. So we'll see if they protect this gap in the USO. This is, 993. It's actually probably a little bit below it. So we'll see. This is your pivot here. If it gets below it and stays below it, maybe you stay out of the way of oil. If it gets below, it comes back up. That's probably fine. Last time it pulled back to trend. Trend here will probably be somewhere closer to almost filling this gap, which is a little closer to this 970. So this is support 1, support 2, and it's below Friday's pivot low. So this will be the area that I think needs to hold in order for this momentum in oil to stay. In the XLE, real quick, you look at the chart. Bumped up right against the 200-day. Okay, couldn't get through it, and now it's probably down a little bit more than most things because it's the most affected by oil. You do have this gap here in XLE. So if you didn't want to have risk on based on what could happen over in Doho, which a lot of us traders don't do, we don't like to take risk on into an event, then I would say see if you could buy this thing back a little bit closer to 62. I would think this is a decent opportunity from 65 down to 62. That's a decent spot this morning to look.
Banks reported last week and beat the lower expectations. Do you think that traders will start buying that dip in names like JP Morgan, Citigroup, Bank of America?
Well, those three have already reported and they've responded pretty well. It was interesting the way it traded. JP Morgan came out, the banks had a really nice move. Bank of America came out after and they still sustained it. And then on Friday in my note, I was like, I think the bank stole a little bit from JP Morgan and Bank of America because Citigroup's up, but it was also up with those reports, so it might be a better sell than buy. So I think it's going to be very, price specific if you're going to make any money in these banks, because buying strength in the banks have not worked. So if you take a look here at the chart of the XLF, you'll see that, it too, look at that, bumping right up against the 200-day. I would say, I would like to see this gap hold, let the 8-day catch up, and I would rather see you be a buyer closer to 2263. If you look at JP Morgan as like a leading indicator, I would also say it just pulled back. This would be a very, I would say, impressive level to hold. I don't think that does. I would say in order for any momentum to stay in the banks, you want to be a buyer of the banks at a prior pivot by the gap, and this gap comes in a little bit closer to 60.40. Citigroup was a good short by some guys on the VTF on Friday. As I said, this is when the rally started with JP Morgan, Bank of America, so it's been hard for it to go on its own. So for this one, this is a prior pivot. I would say, if you want to be in Citigroup, or if you shorted it on Friday, maybe cover into 44. But this little 43.50 to 44 area would probably be a spot that needs to hold. And this morning, Morgan Stanley came out. Numbers weren't, we'll beat it lower expectations again. It's up a little bit. Here is key resistance going across. So I'm not sure if it'll do it today, but if it wants to get above it and play some catch up, this high here is like 2660. So we'll see if it can get above and stay above, and that probably would be, better, good for the broader indices. But all in all, it's a broken name, but has some room if the banks want to remain bid for.
Most sectors have held in. How do you think the small caps and bios look?
They look all right. There are times to trade them, times when they're just sitting there. And the Russell has been better than the bios, but then the bios gave you more bang for the buck when they went. If you look real quickly here at the IWM, you'll see that it's trying to take back the 200-day. At this point, same story here. Can't get too bearish if it holds above 110.51. The question is, does it hold this upper area and create a flag to keep the momentum even stronger? So this is support 1, support 2. The bios, held in there Friday while the market got, a little pressure from that, Apple news, which we'll get into. This was, a nice breakout that we targeted with options. And then here was your red dog reversal, which was another nice entry. And now, as long as it holds this 277-ish, there might be, an opportunity for it to continue to play catch up and get above this 283 to make a move towards the 200-day. So the chart of the IBB, is looking more constructive than it was, last year when it broke this. But you still have to be, kind of careful that, that the music doesn't stop in the overall market, because this has been the laggard group, and usually the laggard group, gets hit the hardest. So we'll see if the flows stay or not.
High beta tech has been very mixed, and today after the close we'll hear from Netflix. Do you think some traders will be trading this after hours today?
There's an art to trading earnings after hours, but because a lot of traders don't take stock into the print because you can get put out of business, especially with Netflix, a lot of guys, if you bet wrong and you say I'm going to short Netflix could be up $12 to $14, or if you think it's going to go up, it could also be down that, like most high beta tech names. So what my traders will probably do is they wait for the actual news to come out. They're armed with levels, pivot support, pivot resistance. They actually have to know, what the street's expecting, etc. And if it gets above a pivot and stays above a pivot, maybe there's action there. So, if you look at Netflix, gave us a nice trade last week prior to earnings, thank goodness. You guys remember this engulfing day right there, and then it gave you follow through. A lot of us were long that on the VTF. So now I would say write this down. This is support 1, which is 102. Sometimes they hit it first, and then here's your 200 day. Okay, that's 99. It's off a little bit this morning on the news that Amazon's going to have a streaming service. So, that's why, it's tough to trade. I was in Netflix a lot last week. I'm like, I'm not taking it the day before earnings because, people might get scared. There might be some news, etc. Anyway, here now is pivot resistance. So if the report is awesome and they beat on the U.S. metrics and overseas, et cetera, in order for it to have real momentum, it's got to get above 111.85 and stay above. Remember, I think earnings were right here. We talked about this downtrend, and it was like, okay, it's got to get above 116 and stay above, and it didn't. So we'll see what happens here if the report's enough to continue the momentum back towards highs, or hopefully it's not too bad where it falls apart and then there's no more momentum in some of these high beta tech names. But those are your levels.
Google and Amazon had a nice week. Will they be a focus for you today?
I'm going to look a little bit there. In a down open, both names have been strong. Maybe they can go green. So, with that said, Amazon was the one that did come out with news of a new streaming service. Really, the time to have bought this, which we went over many times, Chelsea and I, in this morning call for you, is when it broke above this flag pattern. When it took out 603, went to 627. If you're still in it and trailing it, good job. It looks good. Here's your next level, and earnings are until next week, so you don't have to worry about that. So if it's off a little bit with the futures, maybe it goes from red to green. If you're looking for an upper level of support, in this one it's 618. Anything below 618, then you have the 8-day at 609. Google gave you a nice red dog reversal when right here on the 21-day. Boom, and that was your pivot. That was pivot number 1. Some people bought the dip around 757, or maybe when it took out the inside range, and it looks good. All-time highs are right here. Earnings are out on Thursday. I'm not sure how much of a run it's going to have prior, but at this point, again, if it's off $3, $4 and you see it hang in there when the futures go down, maybe it goes green and continues. But again, 1, 2, 3 on 4 green days, I typically think it's a little bit harder because if it starts to get weaker, you're not sure where that pullback goes. But both should be watched, and we'll see how they respond to today's early morning weakness.
Apple got hit on Friday after a report came from Japan that they're cutting some of the production. How did you handle that unexpected news?
Well, one of my rules is, when I leave at lunchtime for meetings or go to the gym, whatever it is I do, I put stops in. And I've had a stop in at the low of the day on Friday, just in case. So all of a sudden, I'm in a meeting and someone texts me, Apple came out with news, it just got hit hard. I was like, whew, I hope my stop is there. And those that watched the VTF, they know I was long Apple, then it was gone. And I think I sold it at 111.60. I should have had an order to double short it. But anyway, why did I have an order there? Just to give you guys a little education, because this was the prior day's low. So I was playing for it to hold higher and then continue. So when it broke this 111.33, I get out. And it wound up saving me, $1.50. Now it's down another 75 cents. So since I had my stop in, I have the luxury of seeing whether or not the 21-day, which has been above since this last viable pivot, can hold. So now instead of sucking wind and being where does it hold, I could actually maybe buy versus this, or if it doesn't get down to there, if it could go green and get back above 109.73, it'll keep this range intact. So I'm going to be looking to see if I could, I could buy it versus this 108.70, or down 70 cents. Maybe it tries to go green and and then continues to be in this range until earnings, and earnings are not this week, so the stock can do whatever it wants to do.
Disney's Jungle Book crushed it at the box office, over $100 million in sales, and it got upgraded. Do you think that this stock can actually break above 100 this week?
I hope so. I hope so for Sperling's sake too. Mark's been trading this thing for a while, waiting for this breakout. You would think that, such a high quality name that just had a movie that beat every expectation. In the chat we were talking Friday, I'm like, I think this movie is going to do awesome, and they're only thinking 60, 70 million, here in the Northeast or wherever, or North America, and it did over 100. So it did 105, and I think this type of movie people are going to see a few times, and with overseas sales, I think it's almost at 300 million. So anyway, it's not like it's been priced in. You look at the chart here. This chart has been going sideways for quite some time. So, if you look here, the 200-day is higher, okay, and then you have a round number, which traders always love to try and trade through, which it hasn't been able to, close to 100. So I would say as long as it holds, this 98 area, it's in the game to get above it. I am long it, and I'll see if, big volume comes in today. Maybe I'll add to it, for a break above. I think it got a $120 price target today, which would take it north of, all-time highs. So if it goes red today and goes down $1, I think a lot of traders will be frustrated and will probably say, you know what, time to go back to tech and get away from Mickey Mouse because the action, is for Minnie Mouse. No, I'm kidding. Well, anyway, we'll see what happens today. That was very sexist, wasn't it? All right, I'm sorry.
No, it's okay. In Barron's was a story about GM and Ford, GM and Ford.
Yeah.
Yeah, GM and Ford, with potential gains over the next year. Will you check out these stocks, or will you stick with Tesla?
Well, Tesla has the beta, and it moves very fast. But, whenever Barron's comes up with a story like that, if the chart's okay, and you have multiple positions, and if the market's trending, why not check them out? So, let's take a quick look at Ford, see, what the technicals are telling us here, not just what Barron's is telling us. And it's been pretty trapped, you could get rid of that. You could draw this downtrend into here. So technically, really, until it gets above this 1350 in the 200-day, it's not looking great. You had, this move off the lows. So if you want it to be long, maybe be long versus 1250. And then at some point, if this were to take out 1350, maybe you get a little bit better action. It's just slow, something you're not going to trade and over focus on. GM, how does that look? Looks pretty, they don't look that interesting. They look like if you're a guy that has 15 positions in a portfolio, maybe it could be one or two of them. And, you could trade this versus 29, and if this happens to get above here, the 200's next. But then you go to Tesla, a lot different. Look at this, above the 200-day, above all the moving averages, near highs. So it shows you technically, this has been much better. So at this point, might as well go over it. It's been hugging the 8-day for, pretty much the entire rally ever since, this V bottom. So at this point, it's tight. And we'll see, what it wants to do. If it wants to get above, first of all, it's got to stay above, I would say, this 247 to 248, which is right there. If it could stay above that and the market tries to go green or beta, starts to act well, above this 254, then you're back at highs. So move below this, then it gets choppy again, and then you have this, 243 and then the 21-day. And this has not been below the 21-day since 180. So if you want to hear me say that word again, can't get too bearish until it breaks below 240, but then obviously you're prepared with 247 and 243 first, and if it gets above this, maybe we're going back to highs.
Metals are still in the upper range and holding the 50-day. Can you show us the chart for the GLD?
I sure can. And a lot of guys, trade in the range here. At first you had a big move to start 2016, and then you get a range. And if you look here, the 50-day has been support. First, move where you had some momentum was when it took out the 200-day right here. And then on this topping tail, I remember that's when I got out of mine and I played it for, one of those 3-day moves where I looked tight, boom. And then since then, now it's just going sideways, not the easiest thing to trade. It held the 50-day again. And now I'd say, upper resistance is close to 120 with a little bit of a spot, in the 118. So if you bought it, on the dip here, maybe you trim some because they still think it's not in breakout mode and it's in trade mode. And so, buying the weakness is better than trying to buy the strength. So at this point, 118.12 is Friday's high. If it stays above it, maybe stay with it. If it happens to, open up and sell down, I would just, take the trade. And unless you're in it, on a multiple weekly, monthly plan where until it breaks below the 50-day, you want to be long. But it's getting a little testier.
Do you have any more closing thoughts as we go into this new week?
Markets had a long run, and a lot of people are saying that it was based on fake news or jawboning out of OPEC for oil to have production cuts, which didn't happen. So from 25 to 43, now all of a sudden, this meeting is done. There's not another meeting until June. So all we're going to hear is rumors and headlines back and forth. But I would say drown that out and watch the action. As long as oil stays above 35 to 38 in this month, it's not going to be too much of a headwind. As far as earnings season, the banks beat the lowered bar. Maybe there's some trades here and there. But this week, things start to get a little bit clearer. You have Netflix, so we'll see how Netflix responds for high beta tech. Then you have Microsoft, which has been really strong. On Thursday, you have IBM, which has also been really strong. So we'll start to hear what the new narrative is for this earnings season. So far, they beat lowered bars and responded okay, and we'll see what continues to happen there. And take it trade by trade. If you're in a spot and you don't think you're comfortable with 6, 7, 8, 9 longs, you know what? Then don't be flat. If you're trying to be short, it hasn't worked for a while, but as soon as everyone stops trying to short, then it usually works. So we'll see if that changes. So all in all, it's another week. Things should get busier. There should be better trades out there. I would be very careful holding positions just in case it has earnings or whatnot, because you need to be prepared. The last thing you want to do is say, "Oh, Netflix closed strong today," and "Oh, I didn't know it had earnings," and then it's down $14 the next day, or vice versa. So be prepared, and there should be some decent trades, and hopefully we'll have them for you here.
Great, thank you, Scott.
You're welcome.
Everyone, have a great trading day.